Okay, so time for a quick recap of the longs I took yesterday on BTC, which was this one, and on gold, which was this one. Both very similar trades and bread and butter setups. So let's discuss them quickly. First of all, I was on vacation, so during the time I was not watching the charts, but overall we can see that price was trending down. So you could say that this is your range, where you have your range starting point right here, tab 1 at the lows and tab 1 at the highs. And then that is basically your range low, range high, and then it's just a matter of patience to wait till either your high or your low gets taken out, which eventually happened with this move, where we can see that price trended down, clean downtrend low, lower high, lower low, lower high, lower low, lower high, lower low, took out the range low and came back in the range, therefore making it a valid tab 2. So then it is valid to move your range low to that second tab. Depends, it doesn't have to, you can also keep it at tab 1, depends a bit on what you like yourself the most. And here it's where we had tab 1, tab 2, and always after tab 2 we know it is valid to start looking for potential third tab formations. So last week we even formed a local range right here with our range low right there, range high right there, followed by a sweep 1, 2, price coming back, eventually turning into a model 2 distribution, where you have your 1, you have your sweep, and then you have your lower high, followed by a break of structure right here. Target of that model 2 distribution was the range low, to take out that range low. So early this week, as I shared multiple times in Discord and also on X, was the idea to complete the model 2 distribution right here by taking out that range low and then see if price could flow over into an accumulation. Because on the high time frame we have that 1, we have that 2, which could signal towards a 3 drive. I'm not necessarily looking at this from a Wyckoff model 1 accumulation perspective, but more like a 3 drive right here. So 1, 2, and 3. Let's give that the blue color as well. 1, 2, bullish 3 drive in combination with a local Wyckoff model 2 accumulation. Let me show you it right here. We took out the range low, therefore completing this model 2 accumulation, target hit, and price did exactly what you want to see for a accumulation, because we took out the range low, but we SFP'd it. So we saw sellers stepping in, buyers stepping in as well, leaving a wick behind. So no close, but a wick. And then if we look at the structure that we had on the move down, you can basically see it like low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. So this is your, let's make that a black. This is your bearish structure inside your leg. We have a tab 1, we have a tab 2. For model 2, you want to see a clean break of structure back to bullish, which we got right here. So that is our bullish break of structure, in which it is valid to start looking for accumulation models, because we have now a higher time frame bullish 3 drive, 1, 2, 3, and we have this local range sitting at the high time frame range low, where we have a tab 1, we have a tab 2, and then internally we have this bullish break of structure back to bullish, which left this super clean 30-minute demand behind. Since we have a tab 1 and a tab 2 with a great buyback and a bullish break of structure, it is valid to look for a higher low for a higher high. So then your question is, what is your extreme liquidity or extreme demand? In this case, there was not clean extreme liquidity, but this whole extreme demand was super clean. So basically this whole demand was my PY to look for a higher low for a higher high. So the moment we broke structure back to bullish here, this whole zone was my demand PY. So that is also where I took my first long, which was first a loss before the win, since we had this structure right here. So we made a high, this demand zone was the PY. With low, with lower high, here we SFP our market section low, get a break back to bullish. So this internally was for me already a trigger, because this is the bullish boss. Here we SFP the market structure low, basically taking liquidity, SFP, and we tapped into the extreme demand PY. So then it's valid. So here I was looking for a potential entry, which I was still patient to see an internal bullish boss, which we did not get until right here, where we had low, lower high, lower low, lower high, and I still wanted to see a bullish break inside this local leg, which we did not get until here, low, lower high, lower low. And then here we had like a local break. So my first long attempt was right here. My stop was still below this low, because this low took liquidity from that low, therefore being a clean invalidation. And my target was the range high, because we are playing a Model 2 accumulation in which your target is always the opposite side of the range. So this was my first setup right here, which got stopped out quite quickly. But that doesn't matter, because the plan was still valid to look for Model 2 accumulation. So then it's really important to keep your cool and just accept the loss, zoom out, and remember what the plan was. The plan was to look for a higher low in this leg, and it can happen anywhere. Right now I took it here because we had a low time frame trigger, but price can come all the way back here and then still put in at higher low. So then we just clean up the chart, still look at the bigger picture. This is our demand PY. And what I then saw was that we took liquidity. So we had basically a tap 1, a tap 2, and kind of a tap 3 and 4 here. But what's more important to me is that I saw it like liquidity getting taken. Liquidity there, liquidity right there, liquidity taken right here, with a super clean internal bullish boss. So with low, lower high, lower low, lower high, lower low, boom. Internal bullish break while buy sell side liquidity is being taken, and we are in our demand PY. Not even sure if we are also in the FIB confluence. Yeah, almost. So not entirely, but close to the 7.2, probably around the 618. So here we had the internal bullish break, right there, bullish break, and we first took a loss, but now this is another trigger, because if we zoom out again, we have everything we want. We have tap 1, we have tap 2, we have the bullish break back to bullish, we have 30-minute demand, which is our extreme demand PY. In that demand we want to see an entry trigger, which we first got here, which was the fake one, but then second one was here, and then you just have to try again. So that is what I did as well. Still long, yeah, here. There is the long trigger, took the long, stop loss below that low, and there you can see crazy run up, where I first took a little bit of profit around here, live during the stream, put my stop loss to break even, just to be in risk-free position, and then early this morning I saw that the full TP got hit, which was around a 7R. So first we had a 1R loss, so that makes 6R profit, and we took out 1R, so around a 5R profit on this overall trade. And super clean Wyckoff, local Wyckoff Model 2 accumulation with a higher time frame, bullish 3 drive. Overall, I think this could have legs up higher, especially depending on how we move right here. Can we break structure? Because if we ignore this all, then our main structure is low, lower high, lower low, lower high, lower low. Manage to close some candles above this level, and we have a bullish break of structure on like the 4-hour and higher time frames. So far we wicked it, so we need to see close above here. But if we get that close, then I'm looking for a higher low, for a higher high, potentially all the way up to 68k. But earlier today I made a video with my views on that, so I recommend to watch that back. Now quickly going to gold, because it was a super similar trade, like super similar. Because on the high time frame, also here we had a range low, a sweep of that low, and another sweep, aka local bullish 3 drive, where buy side liquidity is taken. or sell side liquidity is taken, which is a great sign. So let me make this one blue. And then just as with Bitcoin, locally we had a range right here where we can pull a range from low to high, because locally we're trending down. So low to high right here, clean range. Then we have a range low right here, range high right there. Price wicks the range low, but see buyers step in. That's exactly what you want to see from an accumulation perspective. Not a close below, but a solid wick moving back in the range. And then you can watch, do you have extreme liquidity or extreme demand POIs for your Model 2? I was more interested here in a 1, 2, 3 Model 2 accumulation instead of a Model 1 accumulation here locally, because we already had a 1, a 2, a 3 here. So I didn't want to see another low here, because then you have a 4 tapper. That's usually a sign of weakness. So here my plan was to look for a 1, a 2, followed by a higher low, which we eventually got. But then we have to zoom in a bit, because in this leg, like Bitcoin had a super clear structure right there, low, and then broke it back to bullish, and then higher low from higher high, super clean. But gold had not super clean structure in this leg, because this one was super aggressive to downside. But if you zoom in, you will find that you have some structure here: low, lower high, lower low, lower high, lower low, and here we had a bullish break. So also then it's better to look for a higher low, for a higher high, and therefore for a Model 2 instead of a Model 1. Then you can ask, what is your extreme liquidity, extreme demand? Then you have to flicker through your time frames a bit. Then you can see that on the 3 hour you had this whole zone, but on the lower time frame it was more precise. Not exactly sure what it was, but 15 minutes maybe. Yeah, so you had this whole zone is basically your demand, but on the 50-minute we had this local refined extreme demand POI. You can see that price came exactly into that level, also with local structure, because if we look at the 50-minute, we can say we have low, lower high, with lower low, with lower high, lower low, lower high, lower low, and then this is your bullish break right here. So this is the bullish break of structure. This was also the daily point of control that got flipped. So what do we have here? Very, very similar, again, a Wyckoff Model 2 accumulation with a range low, a range high. We swing fill the range low, break structure internally, come back for extreme demand right here, and then you want an internal bullish break of structure back to bullish, which we also got. So that was the, I see that we're pumping right now because I believe NFP just got released. So that was the entry trigger right on the, right there. So here we had the bullish break. I entered a little bit later. And this is like the dream scenario. Enter and directly to TP. Didn't even look at it. I saw it going well. Then I had a call with someone, and then after that call, full TP hit for a 5.5 hour trade. So combined around a 10 hour profit with that BTC trade and that gold trade, both basically Model 2 accumulation plays, super clean. So this is the recap. If you, right now we can see, do we potentially get a 3 drive right here? Could be the case, but I don't think so, because this leg had a lot of strength. Right now we also show a lot of strength. So the way you move into your taps is always really important. Like here it was pretty more or less slower, and here you see a lot of strength. So I'm not particularly looking at it from a 3 drive perspective there. But there was the review. If you want to ask some questions, feel free to do in the Discord as always. That was it. Thanks for watching.